You've all heard of those clickbaity hooks. Want to get rich? Want to build wealth? Invest in the stock market. Well, this isn't any financial advice, but man, if I had $1 for every time I heard this, chances are I wouldn't need to worry about building wealth. Unfortunately though, that might not be the best idea, according to the power moves made by these wealthy individuals. Here's the thing, the wealthy are predicting a stock market crash. Yeah, you heard that right. So, is the stock market still the best place to put our hard-earned money right now? Hello and welcome back to Tide to Wealth, where you are just one sale away from reaching financial success. In this video, we'll talk about what the investors are saying, why they're saying it, and whether a crash is actually imminent in the first place. Warren Buffett, arguably one of the best investors in the world, and Michael Burry, an investor worth over $1 billion, have bet against the stock market. The two are now ready and are waiting for stocks to just nosedive so they can make a profit. Take a look at Buffett, for example. The guy's company, Berkshire Hathaway, has sold a net whopping $8 billion worth of stocks. On top of that, the company has also slowed its buybacks. When you add all that together, his company has seen a 13% increase in the total amount of cash and treasury to a near record $147 billion. In other words, the guy's been divesting his assets from the stock market, and that can only mean one thing. He thinks it's going to go down in value. Because here's the thing about Buffett, he's not some day trader making money over little blips on a graph. No, he buys high-value stocks, holds them, and invests the dividends back. The reason why he does all this is because he's expecting the value to eventually go up, thus building wealth. But here's the thing, he's divesting, and this could surely give the impression to others that he thinks a crash is coming. And if that doesn't convince you, Michael Burry's story might. Burry, the big shot investor who's famous for predicting the house collapse in 2008, has bet more than $1.6 billion on a Wall Street crash. According to a Security Exchange Commission filing, his fund, Scion Asset Management, has bet against S&P 500 and Nasdaq 100. The fund has bought $866 million in put options against a fund that tracks the S&P 500 and $739 million in put options against a fund that tracks the Nasdaq 100. Now, before anything else, let me clarify something. Sure, the headlines will make you think he invested $1.6 billion of his own money, but no, he didn't do that. He invested $1.6 billion of his firm's money. I mean, that's how the rich stay rich, don't they? They use someone else's cash to play the market. If it pays off, they take a neat little cut. If it doesn't, they just start all over again. But even that, the fact the guy is using more than 90% of his company's portfolio to bet on a market downturn means something. Here's the interesting thing though. This isn't the first time he's bet against the market. In January 2022, the guy tweeted a message to all of his 1.4 million followers, asking them to sell. That's it, he didn't elaborate further. Then, in March, he backtracked on his own statement, saying he was wrong to say sell. However, this time, he hasn't tweeted. Instead, he's put his money where his mouth is. Cause what you've got to know is that the S&P 500 and Nasdaq 100 have made massive gains in 2023. The S&P 500 is up 16% and the Nasdaq 100 is up 32%. When most people see gains like these, they want to get in on the action and they want to start buying. But nope, that's not Burry. And here's the thing about Burry, he knows what he's talking about. I'm not saying he's right, no, but what I am saying is that he's got the right experience. You see folks, in the mid-2000s, the guy was famous for betting against the housing market. And then we all know what happened. There was a subprime lending crisis and a lot of major financial institutions collapsed. In the middle of all that chaos, Michael ended up making a massive profit. I mean, the entire thing was so darn impressive that Michael Lewis wrote an entire book on it called The Big Short: Inside the Doomsday Machine. Not only that, but the book was later adapted into a freaking movie. Michael impressed everyone so much that Christian Bale, of all people, played him in the film. So I mean, yeah, he knows a thing or two. So, if he's betting against the market, chances are he's going to win. However, betting against the S&P 500 and the Nasdaq 100 isn't the only thing that he's doing. Burry's fund is also getting out of its shares in several regional banks. The fund sold 150,000 shares of First Republic Bank, and it also sold its holding in Huntington Bank, PacWest and Western Alliance. However, whether the fund sold these shares before or after JP Morgan Chase took over First Republic Bank is still unclear, but he's clearly expecting those banks to go down. maybe even expecting an implosion as bad as the SVB one we saw back in March 2023. Well, at least he's not betting against the global markets now, is he? Yes, he is. Michael's firm has also reversed course on Chinese stock, selling shares of JD.com and Alibaba. But is Michael expecting everything to collapse? Well, no, not really. There are some names that he and his team are betting on. The firm has increased its shares in the travel and healthcare industry. Scion has bought Expedia Group, MGM Resorts, CVS and Senior. For those who don't know, Senior is a for-profit health insurance company. Not only that, but Burry also expects the entertainment industry to do well. His company has bought $4.7 million worth of shares in Warner Bros. Discovery. After the spectacular way the Flash failed, betting in favour of Warner Bros. Is a super bold move. Scion is also expecting the world of thrift shopping to do well. After all, the company has bought $3.3 million of shares of the online secondhand retailer, The Real. So, if you're just going to be taking a look at Burry's bets, there's some reason to be optimistic. However, the problem is that in financial circles, Burry's pessimistic predictions always end up getting way more attention than his optimistic bets. And look, I'll be the first to admit that one massive payoff does not guarantee future returns. But despite that, Michael has had a super strong investment record. If you had followed his investment disclosure by Scion between May 2020 and May 2023, you would have made an annualized return of a whopping 56%, beating the S&P 500 by 44%. Yikes! So, this is what Warren Buffett and Michael Burry are doing. But does it actually mean they're predicting a crash? Well, not really. Buffett has increased Berkshire's cash by a whopping $38 billion over the last 3 quarters. But that could also mean that he's just saving up money to buy undervalued stocks that he knows will increase in value eventually. Yet, if the market does fail, he'll have the opportunity to buy all these stocks back at a massive discount, thus increasing his shares in these companies. I mean, he did exactly this during the Great Recession, when he struck deals with Goldman Sachs, General Electric and a whole host of other companies. But the point is, unlike Burry, Buffett hasn't made any comments. Michael, on the other hand, claims that there's a historic bubble that we're seeing, and he predicts the mother of all crashes. So when you combine his track record, his statements and his latest short positions, it makes sense why the alarm bells have been ringing. Because at the end of the day, he's a value investor who specialises in finding underpriced businesses and then helping them grow. So let's talk about what the experts have to say. Robert Kiyosaki, the author of one of the best finance books, Rich Dad Poor Dad, says that the entire reason why Buffett is stockpiling cash and why Burry is betting against the benchmarks is because they're fully expecting the stocks to tank. Now, it's clearly possible that Buffett hasn't found anything worth buying and that Michael just wants to hedge his portfolio. But it's also possible that these two folks think that the stock market is overheated and headed for trouble. When you look at it that way, one might think it makes sense to pull out. But the question is, why is the crash even expected? Well, thanks to COVID lockdowns and the supply chain issues that followed, there was a massive wave of inflation. It got so bad that many economies went into recession, and many almost made it there. In the era of sky-high inflation and super sluggish economic growth, it makes sense that folks might be betting against the market. When you factor in rising costs such as rent, mortgage and utility bills, and couple that with slow growth, it leaves little room for non-essential spending, which could lead to a crash. Now, if this crash was to ever happen, what should you do to prepare for it? Well, first of all, you need to remember the first rule of finance. Cash is king. Try to have as much cash on you as Warren Buffett, so you can buy the stocks at a discount price. But other than the market itself, don't allow yourself to get complacent. Learn a new skill, take a short course, grow your network, read a book, and always just improve yourself. Because the second you stop learning, others will pass you and do better than you. So, the future is going to favour the folks that are willing to be adaptable and the folks that are willing to learn different skills. With that said, thanks for watching. Until next time.